The dip that the whole market experienced was not the sole or main reason why AMC and GME both retraced today. Oh no, it was rather the perfect excuse for hedge funds to really go all out on printing naked shares and dip the price without raising too much suspicion. The perfect opportunity to move in and try to orchestrate a massive nonsensical dip that breaks some of the progress we made over the last couple of days. Nonetheless, I have the evidence needed to demonstrate without a doubt that hedge funds are stuck printing to give the apparition that AMC and GME lost their mojo. But first we have even more news. In fact, we have way better news than what we went over in yesterday's video, which if you didn't watch you should take a couple minutes after the video to go over. The biggest set of news is that the ICC 2021-007 passed. For those that don't know, this essentially updates margin requirements for hedge funds, which can and will be increased depending on price movement. If the account margin exceeds the capital, their broker can quickly margin call them. This is done in anticipation of a chaotic market, hypothetically speaking. This essentially guarantees that the ICC have enough collateral and liquidity to meet its financial obligations. What is more interesting isn't even the approval of this amendment, but rather in the details within the filing itself. The filing recognizes and acknowledges that they are aware and anticipating more volatility in the near future, which is funny because if you remember, the OCC did some testing and found that stress levels suggested so much volatility that they had to increase the clearing fund pool. It is literally as if every single financial institution in Wall Street is literally acknowledging low-key that something imminent is about to happen and there will be hell to pay for those that decide to conveniently default when their time to pay is up. This ruling also limits the ability for defaulting parties to pick and choose what assets can be used for that collateral we talked about. The ICC now has overriding power to tell them straight up no, you will liquidate immediately and pay cash up front, no excuses. Now, and this is something I have only seen two people talk about, there is another rule that took effect recently as well that is super important. This one is called the ICC 2021-008. This one updates the model of work that determines margin requirements and risk management. This model for the most part only takes into account cases with extreme volatility, which at this point seem to be guaranteed based on the statements within the filings themselves. If a security is determined, in a testing model, to be incredibly volatile, they will use this model to calculate and adjust margin requirements. This works in conjunction with ICC 2021-007, the one we just talked about. It is important to know that when the chips start falling, you hold. Things will get crazy and the price volatility of both GameStop and AMC will increase to the point that it might not simply shoot straight up in one perfect move. We can easily run up to $1,000 and then $5,000 and then drop to $500 and many people will freak out on this and get the immediate impulse to start selling and collect what will be a huge sum of profits. This will be the biggest mistake of your life, because you will miss out on the bigger squeeze. You need to take into consideration the scope and magnitude of what is happening. There is an estimated 1.5 billion of naked shorts in AMC alone. Do you think that the price of AMC will merely reach something like $50? The real squeeze, in my humble opinion, will happen when GME reaches six figures or higher. Both AMC and GME shares will explode into historical levels that will be talked, studied and formulated into every financial history book. This event will change the entire system. Don't you dare sell on a small jump, because once hedge funds default on their payments and they are suspended with their assets being auctioned off for the highest bidder, you can expect billions and billions of dollars worth of purchases of the stock. It will most likely take a couple of days, and when it does, I plan on selling in extremely small batches on the way up and on the way down to average myself to the higher price possible, since I am not Nostradamus and can predict the exact higher price they will reach. When they do, I expect AMC and GME to have billions of dollars in cash, as I see them selling some of their shares to bring in liquidity and cold hard cash, which will put them in perfect positions to cover their entire debts and do whatever they want. And this brings me to my next important point I want to make. Do not place limit sells yet. I have seen many people placing them or having their brokers automatically set it for them. Make sure you delete these orders because they will automatically sell your shares. Even now, we are seeing many new investors place limit sells on AMC and GME when they are so manipulated and abused. Take that off, because every time you place it, and hedge funds attack the price vertically, they do so with intent of activating that limit sell and getting your shares to help them cover. This is one of the best strategies they use, and today was a perfect example of them implementing such tactics. Why today, you may ask? Because it is in red days that hedge funds abuse the stocks in order to camouflage their scheme and tactics so they don't come off as blatant and raise eyebrows in governing bodies. The entire stock market today was just catastrophically red, with mounting fears of inflation. However, another reason for this dip was due to Chinese regulations on cryptocurrency, banning financial institutions from accepting cryptocurrency as a form of payment for their products and services. These two elements combined gave way for hedge funds to implement a massive amount of naked shorts into the market. Dark pool trading accounted for more than half of all the trading that took place today with GME and AMC. Trading volume, however, suggested that more retail traders were buying the stocks than selling. The figures were similar across different brokers, which insinuates that the dip we experienced is nothing more than an illusion from hedge funds to scare you. What gives me such certainty? It appears institutional ownership grew today, as many seem to have taken advantage of today's weakness to add shares. If institutions are buying and betting on AMC, why should I do the same? In regards to news, nothing really happened today in regards to our beloved stocks. AMC began the pre-market bleeding out. Even in its attempts to move up, it was quickly shot down. Upon market opening, the stock bounced back a little bit before being beaten down through market manipulation. Nothing about today's price movement was legitimate. At worst, we should have traded sideways. We built a ton of consolidation at 12.60 today, though we dipped lower towards the last couple of hours of trading. Upon the last couple of minutes of trading, AMC had a little surge, closing back up at 12.64. I expect this momentum to extend over to the after hours, as both AMC and GME will recover a bit from being so oversold today. Like I said, 12.60 was a big area of support, which will turn into a wall if we keep dipping lower throughout the next 2 days. There is a nice support line at 12.20 as well. Tomorrow we should be trading around 12.30 and 12.60, unless the stock market has yet another red day, which will give encouragement to hedge funds to go all out like they did today. Keep holding and buying this dip. God knows if it's your last chance to add before things get interesting. GameStop traded identical to AMC. We dipped pre-market, and opened with a bounce back up only for the stock to be attacked and dipped up until the last hour of closing, where it surged back up to close at 168.83. We consolidated at 170, and this price point will become a resistance wall in the future. Expect biggest support to be around 165. Tomorrow pre-market. Granted that we don't experience a huge dip in the overall market like we did today, GME should trade around 166 and 168. I am thinking both stocks should trade sideways pre-market tomorrow, and the attacks will last up until Friday, though I hope I am proven wrong. Both stocks are massively oversold and should experience a bounce up, but the determining factor of this will be the stock market overall. Thank you for making it to the end of the video. Be sure to drop a like on the video and let me know in the comments down below. What do you think your life is going to look like when AMC and GME squeeze and you sell to make life-changing money? What do you think your life will look and be like? Do consider pledging support for my Patreon. This money will be used to fund airplane banners encouraging new investors to join our community and upgrade my own equipment. I hope to see you tomorrow, and have a great rest of your day.